How is everybody doing today? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, I wanted to talk to everybody about a report that came out in December from the US Treasury, which basically looked at the use of artificial intelligence in financial services. Like, how do they feel about it? What do they think are the opportunities? What do they think are maybe some of the risks or dangers to going down the road of AI? So I wanted to bring this report in so we could go over this. Now, this is just a kind of a press release. We're going to look at this press release first, and then we're going to take a look at the report. And you'll see the reason why I want to go through the press release is because it kind of highlights the key findings of the report, or the key recommendations rather. So I figured we'd kind of go through that first, and then we could take a look at the report real quick. So this was from December 19th, 2024, so about 2 months ago. So today, the U.S. Department of Treasury released a report following the issuance of its 2024 request for information on the uses, opportunities, and risks of artificial intelligence in financial services, which summarizes key themes from respondent feedback and recommends several next steps. The report highlights increasing AI use throughout the financial sector and underscores the potential for AI, including generative AI, to broaden opportunities while amplifying certain risks, such as risk related to data privacy, bias, and third-party providers. The report builds on Treasury's work on AI-related cybersecurity risks in the financial sector, including its March 2024 report. Through this AI RFI, if you will, Treasury continues to engage with stakeholders to deepen its understanding of current uses, opportunities, and associated risks of AI in the financial sector. The Biden administration believes that continued stakeholder engagement like this is important to foster innovation in financial services while mitigating potential risks. The report issued today outlines potential next steps to be considered by Treasury, government agencies, and the financial services sector. Specifically, the report recommends the following 5 things. Number 1, continuing international and domestic collaboration among governments, regulators, and the financial services sector to promote consistent and robust standards for uses of AI in the financial services sector. Number 2, further analysis and stakeholder engagement to explore solutions for any gaps in the existing regulatory frameworks and to address the potential risk of AI causing consumer harm. Number 3, financial regulators continue coordinating to identify potential enhancements to existing risk management frameworks and working with other government agencies to clarify supervisory expectations on the application of frameworks and standards where appropriate. Number 4, the financial services sector and government agencies further facilitate financial services specific AI information sharing. Alongside the AI Cybersecurity Forum, recommended in Treasury's AI Cybersecurity Report to develop data standards, share risk management best practices, and enhance understanding of emerging AI technologies and financial services. And finally, number 5, financial firms prioritize the review of AI use cases for compliance with existing laws and regulations before deployment, and that they periodically reevaluate compliance as needed. So that it's kind of interesting here, and this is again why I wanted to talk about this. So this says a lot and kind of nothing at the same time in a certain respect. Like all this stuff is kind of like, oh yeah, that sounds great. Let's work with other regulators. Let's work with governments. It kind of sounds like a whole lot of well, we don't really know what could happen here, so we're just gonna throw spaghetti against the wall and see what sticks, kind of thing. Now, obviously, the big change over here, obviously 2 months ago, with the Biden administration was in office. Now we have the Trump administration in there. Their views on this are going to be somewhat different. I think in a certain respect, it will remain the same, but it will also change a lot. Like, I think that in the same respect, they will want to foster things with regulators. They will want, cybersecurity, CISA, some of the other groups out there. I'm sure they will want to continue the collaboration and continue to kind of work and understand, okay, what's going on with AI and what are the pluses and minuses of having it in financial services. At the same time, the whole talk of kind of like the global, let's work with all the governments around the world to do whatever. I don't know that part of it is going to work the same way. I think that you will have a lot of changes, in terms of in other words, like the the Federal Reserve and working with the international community, like the Bank of International Settlements, the EU, the Bank of England, that kind of thing. Like I don't know that you'll have the same kind of collaboration and coordination amongst the global community under the Trump administration. So, but let's do this for a second, though. Let's get into the report here. So I want to bring this up to show everybody. So this is it right here. So this is the artificial intelligence and financial services. This is the full report. Not a super long report. It's about 36 pages. I want to kind of blow this up a little bit here just so people can see this. And so here in the report here, it has executive summary, background. We get into the responses on the current uses and potential opportunities of AI in financial services, traditional AI and generative AI uses, external and internal uses by financial firms. Then it gets into B, potential risks of AI and suggestions on risk mitigations. And it talks about 6 key things. Number 1, data privacy, security and quality standards, bias, explainability, and hallucinations. Number 3, impact on consumers and consumer protections. Number 4, concentrated related risks. Number 5, third-party risks. Number 6, illicit finance risks. Then it gets into part 5, which is policy considerations. Number 1, regulatory frameworks. Number 2, federal, state, and other legislative efforts. And then number 3, international standards. Number 6 is basically potential next steps. And then number 7 is just an appendix with abbreviations. So I think it covers a lot of interesting things. We get into, the executive summary, background, and I'm going to kind of scroll down to the bottom here, but go through. So basically, number 3 here is key recommendations based on summary of responses. So let's see. So probably some interesting things in here. So it basically says align definitions of AI models and systems applicable to the financial services sector to facilitate interagency collaboration and coordination with stakeholders. Consider providing additional clarification on standards for data privacy, security, and quality for financial firms developing and deploying AI. Consider expanding consumer protections to mitigate consumer harm. Consider clarifying how to ensure uniform compliance with current consumer protection laws that apply to existing and emerging technologies and providing additional guidance to assist firms as they assess AI models and systems for compliance. Enhance existing regulatory frameworks and develop consistent federal level standards to mitigate risks associated with potential regulatory arbitrage and conflicting state laws while clarifying supervisory expectations for financial firms developing and deploying AI. Facilitate domestic and international collaboration among governments, regulators, and the financial services sector, and pursue public-private partnerships to share information and best practices, promote consistency, and monitor concentration risks. So that's really interesting, and that's some really good stuff in there. However, it's just kind of interesting that on the one hand, you have this report from the Treasury that's basically saying like, hey, we recognize that there are opportunities and benefits here, but we kind of need to take it cautiously. And we need to have this kind of robust conversation. We need to put in like guardrails and protect consumers and do all this other stuff. But at the same time, you have somebody like the CFPB pushing open banking. And open banking is like, oh, yeah, let's let everybody and their mother, hook up an API to the back of the bank and siphon out all the customers' data. Okay, you don't think that the companies will be deploying AI in some fashion in terms of use with the APIs and the way that they siphon the data out and the things that they do? Of course they will. Of course, they absolutely will. And so, like I said, it's a very curious way about going about, right? Like I said, on the one hand, it's kind of like we're just going to go full bore and put this out there and open everybody up to all kinds of risks. But on the other side, hey, we need collaboration and we need to put up guardrails and we need to be careful about what we're doing and we got to make sure that everybody's kind of included in the conversation and we're protecting people. So again, you get this kind of, like I said, this very opposite contradictory kind of things going on there by the regulators in very real ways. And like I said, and then just kind of continuing on down here. And like I said, it gets through the main things here. Impact on customers, kind of talks about hallucinations, concentration risks, third party risks. Obviously, third party risks, a big thing in banking right now, illicit finance risks. And then it gets into, policy considerations, regulatory frameworks, federal and state and other legislative efforts, international standards, and then the potential next steps, which is the 5 things that I went over basically at the beginning. So again, just some interesting things here in this report. I mean, it does, like I said, it does look at some of the potential benefits of using AI and artificial intelligence in financial services, but then it also warns about some of the risks inherent in here, some of the things that are just not right with AI right now in terms of bias and hallucinations and other things that may be going on in there. And it asks a lot of important questions, like what are we doing to protect consumers? When banks and financial services firms start to deploy AI, how are they doing that? How are they going about it? What steps are they taking to mitigate different potential risks that might be out there? So again, interesting report. Go check it out if you want to. I put a link to it in the description down below. But I'll wrap up by saying, if you like this episode, please make sure to like, share, and subscribe. That always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, remember to check out some of the other content on the channel. And I will be back to everybody again real soon. Thanks a lot.